everybody, this is Robin Moser with Robin Moser and Associates and RE/MAX Realty Professionals. And we actually are very lucky today to have a guest with us, Carlana Johnson with Canada Mortgage Direct. She's been a mortgage broker for over 10 years, and she's here to answer all the questions that we have that our clients consistently answer. So thank you, Carlana, for being here.
Well, thanks for having me, Robin.
Now, we're going to start with, why should you use a mortgage broker over a bank? What's the value and what's the difference in service of which they provide you? Carlana, why?
Well, I believe because we have options. Now, if you had only one client and they only needed one product and it's very specific, then the bank might be the way to go. But every client is different. And so what a mortgage broker does is they have, or a mortgage associate, they have options. And so they are able to work with the client. They work specifically in doing mortgages, and they are able to take a whole look at the client's portfolio and perspective. And really, it's almost like problem solving, taking a look, seeing what matches up to the client, what makes the most sense for the client, and being able to advise them almost like a financial advisor.
Cool. Now, a lot of our clients are always worried, though, that they're saying, you know, like, I've got all my stuff with the TD Bank, I've got it all with RBC. So can you still get them a mortgage at the banks of which they bank with?
We definitely can. We always look at what their options are. So we can say, okay, some of their major banks do deal directly with mortgage brokers. Some don't. Some have their own internal mortgage brokers. Now, the difference is between a monoline lender and a bank is a monoline lender just does mortgages. So they're not going to come after you and say, please invest with us. Please get a line of credit with us. Please move all your finances to us. They just want your mortgage. And they're able to take your mortgage payment out of whichever bank that you do deal with. The benefits of that is I can give you what your bank is going to offer you, and I can give you what your best monoline lender is going to offer you, and then you can weigh what is in your best interest.
See, I love that, because you know, when you're sitting there, and like, I'm always a big fan of, I don't care what I do at the end of the day. I just want to make sure that I made an informed decision, that I looked at all my options and I picked what was best for me. So it's nice that you have that you can offer. Now, the biggest question, which is like the age-old question, mortgages, is where are interest rates going?
Well, currently they look like they're going up.
That's good to know. Is it right away, or are they going up right away? Or
so a good precursor or idea of where rates are headed is if you watch the fixed rates. Fixed rates as of yesterday and today are already starting to move up. Why? That's based off the bond rate. The bond rate is different than the Bank of Canada rate. Now, the Bank of Canada rate is what moves the variable rates, but usually the bond rate moves prior to the Bank of Canada rate. So when people say, well, should I lock in my variable rate because I just heard Bank of Canada is moving up, or Bank of Canada just moved up their rate, most likely you're too late. The bond rates have already gone up. Now, what is happening is there is a lot of movement up right now. The economy seems to be chugging along very well. The biggest issue that the Bank of Canada has to weigh right now, though, is the debt. Canadians love their debt. And now with increasing mortgage rates or Bank of Canada rates, that increase borrowing rates, which then put clients into financial hardships because they have not planned for their rates going up. And with doing that can cause a lot of issues. So banks, the Bank of Canada comes out every Tuesday of every month. Yeah. I think it's 8 times a year.
Yeah.
And if you read the Bank of Canada, I can never pronounce his name.
Oh, Steve.
Yeah.
I call him Steve. We're close. I saw him speak once.
If you read his commentary, he has said rates, the Canada economy is doing fantastic. It looks like we're going to raise rates twice more before the end of the year. But the biggest thing we need to watch is the debt. So it's a very big question of when is he going to raise rates again. There's a chance it could be the end of the month, or it could be in July.
See, so that actually brings up a really good question. So you talk about, you know, is it about the raising of the rates and stuff like that? So if you're on a variable, your payments kind of slowly go up and you can get used to the payments. But if you're on a fixed, then it's going to be a drastic jump from, let's say, your 2.3% interest rate to your 4% interest rate 5 years later. What's the right answer?
Now, depending on the type of rate you're in, lots of people who are in variables right now are, what should I do? Should I lock in? What they don't realize is even if you're in prime minus a half right now, you're sitting below 3%. You're sitting at about 2.95%. Whereas if you were to go lock in, you could be locking in as high as 3.49, 3.69, 3.89. Now, the question is, how long would it take and how much does it have to move before you're paying 3.69, 3.89? One of the things that I do talk to my clients about is setting your payments higher. So for the clients that are sitting in the variable rate or even the low fixed rates, is increase your payments. Then it goes directly towards principal instead of interest, pays down your mortgage faster, and you save money. And at the end of the day, you're not going to have the payment shock.
So I've heard of things like that you can do weekly payments, bi-weekly payments to also pay your mortgage off faster. Can you explain how that works? Or is there other ways that people can pay their mortgage off faster, like putting lump sums down, stuff like that?
Okay, so most banks offer different options, and that's why it's not always about rate for clients. Sometimes you have to look at the prepayment privileges, and sometimes you have to look at how much you can increase your payments by. Those are all things to pay off your mortgage faster. Now, when people say, I want bi-weekly payments, you have to explain to them that there's different bi-weeklies. There's bi-weekly regular and bi-weekly accelerated. What's the difference? Well, one takes your monthly payment and divides it by 26, and then the other, doing the math, and one divides it by 24. Now, the difference is you basically pay one extra mortgage payment per year. What that does is it can take your amortization down from 25 years to about 22 and a half years over a regular term. I always suggest that clients set up their payments via how they get paid so that they're never concerned that they have money in their bank account. One of the key things is, you know what, I only get paid twice a month, semi-monthly, but they don't have a semi-monthly accelerated. Well, you know how you do that? You just put one extra month in and divide that up by 24. So it just increases your payment. Again, it's just basically using prepayment privileges and paying down your mortgage faster. And in this case, it's just using how you can increase your payments.
So if you've ever talked to me about mortgages, I tell everyone, give the bank as little money as physically possible. I'm not a fan of giving the bank money. So if you can pay your mortgage off faster, pay them less interest, somehow find a way to avoid payout penalties. I don't believe in giving banks more money than they deserve.
I'm complete agreement with that. One thing you always want to know is on your prepayment privileges is people who want to prepay, each lender has different options or different options between the banks and the monoline lenders. Most monoline lenders will let you put prepayment down throughout the year and up until a certain amount before you hit your payout penalty. Where some banks are literally, you can do it on your renewal date. Well, for people who can't remember their anniversary or their spouse's birthday, are they going to remember the day they bought their house so that they can lump sum down? It makes a difference.
We remind you when your anniversary is coming, just so you know. All right, so next question is, lots of times our clients will be going out to buy a house and they'll say to us, and they'll say, hey, Robin, it's okay, I've got a pre-approval. I don't need a financing condition. Now, I obviously will always explain that to them, but explain to them why they still need a financing condition. What is a pre-approval and why do they still need to have that condition as part of the offer?
A basic pre-approval is just a rate hold. The lender has not looked at the actual application. They just basically put it through a system to hold the rate. The other part of a pre-approval is that if it's insured, which I would say the majority of mortgages are, whether they're back insured at 80% now, where the lender pays the insurance premium, or it's less down than 20% down and you're paying the insurance premium. It all has to be insured. The insurer will not look at a deal until it is live, which means you have put an offer in. For numerous reasons, but one of the reasons is what happens if you go and you put an offer in a house and that house is flagged by CMHC, or that building, that condo building is flagged by CMHC.
Sorry, I'm going to interrupt. Why would it be flagged?
It could have been a previous grow up that was not disclosed or that the realtor was not aware of.
That's going to be such an interesting conversation once the pot becomes legal.
Well, it could be, it has post-tension cables that have not been resolved. Things like that, which automatically the insurer can say, we are not touching this. Now, it doesn't matter how great a client you are and how perfect your credit is and how much down payment you have and the whole picture, they will not touch it, which means you cannot get a mortgage.
Interesting.
You do not know that until it goes into the insurer.
So that's why you need a pre-approval. Yeah. And when she's saying that rates are going up, this is also why you might want that rate hold, because if they're going up, lower is better.
Yes.
So, okay, now, how much of a down payment do you need? Because we have sometimes clients that talk to us and they say, well, I have to put 10% down, I have to put 20% down, it's my second house, it's my third house, stuff like that. How much of a down payment do you actually need?
You actually only need 5% down. So there is still borrowed down payment, which is putting it into where you get the money from, putting that amount into your payments to qualify. It's a lot harder now than it used to be. But in general, on your first purchase, for sure 5%, even on your second or third, if you don't currently have a house, most likely it could be as low as 5%. If you have a house or two currently, most likely they're going to come back and ask for 10% down. It's because you've already owned a house, they're less lenient on that, and especially if you still own that house, they're going to look for more down payment just because the risk goes up. But it all is circumstantial on that client. If you're a strong client, they will look at 5%. If you have some credit issues or employment issues or there's some weaknesses, they may automatically ask for 10% even though it's your first time buying a house.
So, you know, I love the way that you pointed that out, the fact that it's about the risk for them. Because so many people don't understand that when mortgages, like lenders, not mortgage brokers, but lenders are looking at you, they're not here trying to do what's best for you. They're there about, I'm going to protect me, and they're looking at the risk of you, the risk of the property, the risk of even sometimes the market. But it's nice that they have that, you have kind of brought that part up, is that the lenders are really looking out for themselves and they're not really looking out for you, which is why, you know, having someone there to look at all of the options to make sure that that's taken care of is a good thing. All right, so now here's the other huge complaint, and this is our last question, is people complain constantly as to how much paperwork everybody needs. And not just at how much paperwork they need, but the fact that they ask for all the paperwork, you think it's already done, and then all of a sudden the mortgage broker is asking for more paperwork. Why so much paperwork?
One of the major reasons why we ask for paperwork up front is to make sure the information you've told us is correct. There are lots of times when I've asked clients what their income is and they tell me A, and then when I get their paperwork, it's B. And they've factored in overtime or bonuses or things like that. Now, that is fine, but in a lot of cases, you need 2-year histories on that. So then we're going back to the client and saying, okay, if we're going to use this income because you need it to qualify for a higher amount, then please provide me your notice of assessments. I'm going to need that. Lots of times when we send it into the lender looks at it and goes, I still have some questions. Can you provide me this? It's not necessarily your mortgage broker coming back and saying, I need this. It's the lender.
Or that she wasn't prepared.
Or that I wasn't prepared,
yeah.
Because there's things that I don't foresee that they may come back and ask for. So usually when we come and ask for a list, it's a pretty set list. Income, down payment, offer purchase, MLS. It's pretty simple. It's when those documentations aren't as simple. People get upset when we say, okay, we need 3 months bank statement history, and they just send us a picture of their bank account. And we go, yeah, but we don't know if you just dropped 100 grand into your bank account. Was that mattress money or was it not?
Mattress money.
And people ask questions, and the reason why they ask these questions is because we're not being snoopy. I don't want to know all of that information. The question is, the government does. It's the $10,000 deposit rule that they have. Where is this money coming from? It's fraud. It's unethical money. Let's go with that.
Unethical money. Like unethical diamonds.
Yeah. So they want to see history. Now, the biggest problem we have, or one of the biggest things that happens to us, is that we have people that have moved money around from bank account to bank account to bank account to bank account. What we're going to ask for is 3 months history on all those bank accounts, because they need to see the flow of money.
Ooh, that's a good thing to know, is that if you want for your down payment, have it in one bank account
for 3 months
before you purchase.
Your mortgage broker / associate will love you.
Yeah, sounds good. Well, you know what, Carlana, thanks for taking the time to come into our office today so that we can have this conversation, this education for our clients. We greatly appreciate it. Obviously, if you need a mortgage, Carlana is your girl. If you need a house, I know a guy or girl. And we love having you guys on. Now, the other thing to know is that Robin Moser and Associates is a very proud supporter of Girl Guides of Canada. So we are giving Carlana a box of Girl Guide cookies as a thank you for coming on and doing our show today. So thank you so much, everybody. I hope you have a great day. Remember, the markets are starting to heat up. We have seen an increase in activity, and we expect this spring peak to start happening now. So you want to get in, you want to buy now. We're in an undervalued, soft market, which is a very, very, very great time to buy, which means that from here in, values of properties will start going up. This is where you're going to start making your money in real estate. So thanks so much. Have a great day, and we hope to talk to you again soon.